Good morning, traders. Welcome to this video on the euro dollar and pound dollar. Hope you had a great weekend and ready for a new week. Last week of September, last week of this quarter, third quarter. Before we head to the fourth quarter, we're going to take a look, first of all, on the euro dollar right now. And then, of course, Wednesday, we'll have an update for the second part of this week. So, euro dollar is in a crucial spot. Either is going to break above this resistance trend line, or what seems more likely at this moment is going to break below this support trend line. One of those two is going to be important as a potential breakout. There's always a risk of false breakouts, of course, which is why I use a technique where I look at a candle close on the time of the appropriate time frame. In this case, I think a 4-hour chart is a good time frame to monitor. And an extra tip or trick is then once you get a candle close strong near the low or high, of course, if you're looking for a bearish breakout, a candle low close near the low, obviously. For a bullish breakout, a candle close near the high. That's what I do. Typically, a larger candle is better, but then if I'm not sure about the breakout, I look at a lower time frame, like a 15, 30, 1-hour chart versus if the breakout is happening on a 4-hour chart, obviously. And I look for a flag, because if there is a close in reverse, let's say that there are a lot of stop losses here, price takes out that level, and then there's a close in reverse like that, there could be a strong candle close, but still double bottom, for instance, and it flies up, and you kind of get stuck in a false breakout. So one trick for that I use is, and I mentioned this before, is basically break flag on the lower time frame and the break of that flag. Because if you have a flag or a consolidation pattern on the lower time frame, that kind of removes or decreases the risk of a false breakout, and typically the follow through on the lower time frame then it works out well in a decent number of cases. Okay, of course nothing is 100%, right? But it's typically a good trick to use. So good candle close followed by a flag or pattern, consolidation pattern on the lower time frame, and a follow through breakout. Should see this move below with 6 and below the bottom, and remove that threat of the double bottom. And then there's space down to with 7 at 115.80. Of course, it can go with ups and downs like this, but that's the main goal for the moment. And even further down to 115, which is a psychological round level, and even with 8, eventually maybe even to 114.40. There's a lot of space down there if it gets the breakout. If it doesn't get the breakout and it breaks instead above the 21 EMA and the resistance trend line, well, in that case, of course, we finally might be looking at that bigger swing up, as I actually was favoring. I thought that this was looking more like an up, ABC correction and up. But the thing is that this particular bullish swing was not bullish. It was not impulsive, sorry. This was, but price has slammed back down again and was not able to break above the 21 EMA fractals. So there's not a lot of confirmation of any strong bullish push up. And in the meantime, we're threatening the previous bottom, and the last support trend line does not look that great for the bulls. So from that perspective, it is looking more like a bearish breakout could take place, to be honest. And in that case, we're looking either at an extended ABC pattern or maybe even a 1, 2, 3. It depends how far this falls. It could be both. But for the moment, a bearish breakout would be plenty of space. You can see that the 610 EMA was a support. Then the 233 and 144 EMA was resistance. So we're kind of squeezed in between those two moving averages. And the question is, whether we get a break down or up. If we get a break down, there's a lot of space. If we get a break up, there's space above the 21 EMA up to the 144, and then maybe there's finally more space up to the previous bottoms, basically. Okay. Otherwise, I don't think I have much to add. Right here is a tricky spot. It could still be a head and shoulders, so I would not be jumping after a short personally. Regarding the reversal trade, I think it's risky just because there's so much bearish pressure on the 4-hour chart. I'd rather wait for the break here above the 144 EMA on the hourly chart and the trend line, or the 21 EMA on the 4-hour chart, because this seems a bit wishful thinking. Of course, it could work out, and there is argument to be made for a reversal trade, but I think it's a little bit risky. Downside seems risky too, just because of the fact that there's still a support quite strongly present here. So I'd rather wait for the decision. I'd rather wait for a clear breakout and followed by the consolidation pattern on a lower time frame. Last week was a doji, and Thursday candle was bullish, followed by a indecision candle, inside candle, basically. All right, pound USD. Did bounce at that previous bottom, so it looks like we're getting that descending wedge pattern that we talked about as well. If it breaks through the 88.6 fib, that it could fall down to the previous bottom, make a triple bottom, and we'll have more or less flat bottoms with a descending line like this, indicating that descending wedge pattern. So a bullish bounce was likely, and we got that pretty strongly. Look at those bullish engulfing twins, or not engulfing twins, but very bullish candle in any case on Thursday, followed by a retracement, and I suspect a bounce back up to the top of that wedge pattern. And I suspect that this could make a B, C, D, E pattern. And from that point of view, I would put a fib on the wave D. And it typically can go to the 78 or 61. But the wave E can really finish anywhere it wants to. And I would suspect maybe more the 61.8 fib at 138 is probably the ideal candidate. But the wave E could stop anywhere. But I think that the 61.8 fib seems to fit the bill the best. Triple bottom could be a reversal pattern too, but that would only be valid if it breaks above this top, if it breaks above the 78.6 cent resistance trend line. At this moment, this descending wedge pattern looks more bearish. That said, I would rather look for a bearish move or bounce at the 61 or 78.6 fib for a bounce and reversal to test the triple bottom and maybe break below it. For the moment, this looks like an A, this looks like a B, and up for C. And I would say a break and close above the 143 MA would probably work out well as a confirmation that price is making that push up to the 61.8 fib and maybe the 78 and trend line. We're getting almost a break right here, right now. Not quite yet, but we're close to it. So yeah, this push up above it could indicate that this is an A, that this is a B that is finished, a wave B that is finished, and that we're now starting a wave C. And that here could be a very strong resistance spot for a bearish bounce and reversal as it completes perhaps this triangle pattern. All right, that's it from my perspective and my 2 cents. We'll be back on Wednesday the 29th and take a look what to expect on the last day of that quarter, the 30th on Thursday, and the first day of the new quarter on Friday the 1st. And we'll be also back with live webinars today and tomorrow. Whichever one, great trading and a great days ahead. Cheers, bye-bye.